Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. You have the Dow down 2, NASDAQ off 31, S&Ps are off 2.5. Gold contract up $5.90, trading at $1,270 an ounce. Silver up 7 cents at $19.22 an ounce. Copper rather, down 2 pennies at $3.13 a pound. Light sweet crude, check this out. It was down $3 yesterday. It's up $2.45 today at $95.33 a barrel. Bonds, the 10-year flat, that went to a lower low, rejected lower price, had lighter volume. Bonds are going topside once again. 30-year bond up 9 ticks after rejecting lower price at 138.31. King dollar down 115 ticks, trading out at 82.89. The euro is up 10 at 131, and the yen is down 26, trading at 104.84. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, we get to a higher high. 2009.28 in the cash S&P. Right now, you're at 0.13. Now, what that would do, that gives you a small failure from the 26th. Your benchmark, however, the larger benchmark is 1991. What we have out here today is that you're going to have a higher high on the S&P, and you're going to have that with lighter volume. So the key is how we close this day. And I suspect what you're going to see is you're going to see selling right into the close. And this is really unusual, folks, because Europe did hold up. Dow Industrials. What did the Dow do? Dow got to 17,151. The high that was established on the 26th of August was 153. The high that was established, which was double topping on the 17th of July, was the same number, 151. The mind blower here, folks, is this, is that today's high was 17,151.89. It got over the 17th, didn't quite make the 26th, and you gave it up. And we're going to give it up, by the way, on lighter volume. NASDAQ Composite. This is the big news, though. So the composite has been going up dramatically on lighter volume. Yesterday, you had volume come in the composite, okay? We did 1.8 billion yesterday. Today, you're at 1.4. It's going to do another probably 1.8, okay? Now, it should be doing more than that, but the bottom line, you had an expansion of volume. Now, it gets up to a high and gives it up in price. And what that's all about, okay, is good old Apple looks like it rang the bell at the high. Apple right now is down 4%. It's down $4.20. That's really not the real news, though. The real news is that you're down, folks, on 109 million shares. We made a high yesterday on Apple in 53 million shares. The door is not big enough to get out of it. If you want to see some trades coming across on Apple, they're throwing, and this is nothing what I expect you're going to see. They're throwing everything at it. If you happen to be watching the screen right now on Target TV, you're going to see that someone hit Apple right at the get-go at 533,000 shares, hit it a minute later at 294,000 shares, but it hasn't stopped all day. You're talking about operators hitting it at 55,000, 40,000, 35, 35. Bottom line is that you have some very large sellers in Apple, and man, are they hitting it. So you go over to Apple. What does that do? Go to the NDX 100. We take the 3 Qs. The NDX 100, right now, you get 21 million shares. That made it to a higher high, by the way. That's going to give it up right across the board. You know, we'll see how we get down. We're at 99.41. Intraday here, coming into this close, is going to get interesting because what we just did is this. Your first leg down on the Qs, we got to at 12 noon. We got to 99.34. We did that on a 10-minute bow at 645,000 shares. We just came into that at the last bow at 632. So that's telling me intraday, we're going to have an ABC structure on the way down. Now, this is going to get interesting. Why? Because you get 45 minutes left, 50 minutes left. Your A point is 100.22. Your B point is 99.34. So it's not huge, but it's 80 cents. 80 cents would get you down to 89.90, 89.95. You know, so we'll see where that shakes out, but it's gonna go after it, and it has plenty of time to basically get down there if they start throwing everything at the NDX 100 as we come into the close. Inside the NDX 100, what you have is this: Apple's the biggest mover. You have C.H. Robinson is the second one that's coming down with volume. Mylan Pharmaceutical and Priceline. Priceline's down $19.11 right now, and that's normal for Priceline. The strength inside the NDX 100, you had Staples, and that's a dead cat bounce. That's up 32 cents. Xilinx is up 98 cents. You got Vipul Communication up 17, and you got Broadcom up 66 cents. Gold contract. We go over to the gold contract. We take a look at GCZ4. So inside gold, what we have is this. Gold rejected lower price out here today. Got to 1261. Right now we're at 1271. We have done volume out here of 97,000 contracts, and that's exactly what we needed, folks, okay? You had to get below yesterday's low. You needed lighter volume, and then you had to reject price. That's what we have thus far, and thus far, the next leg we have to get inside now is 1277 on this contract. Right now we're at 1270. The bonds, ever-ready bonds, forget it, folks. What do? Yesterday, they had wide price spread, price destruction, volume expanded. Guess what? Today, went to a lower low, rejected lower price, did it with lighter volume, stays in the top of the range. 10-year right now has done 1.1 million contracts, rejected lower price. The 10-year now is, the 10-year's got 10-year and the 30-year is doing another ABC structure on the way up. This is going to be amazing. So your 8 point on this is 123.12. Your B is 126. You get $3, which gets you a 127.24 for the next leg up. We go take a look at the 30-year bond. What we have with the 30-year, that also rejected lower price with lighter volume. 326,000 contracts out here. This 30-year is amazing. This 30-year is going to 142. The 8 point on this is 134. It's even big. It's $6. Yeah, interesting. So you get multiple ABC structures that still give you the 142 number. That's how this baby is shaking out right now. King Dollar. Let's go take a look at King Dollar. What we have with King Dollar out here is this. King Dollar was backing off after getting up to a high out here. Got to a high of 83.07. Right now we're at 82.90. Had lighter volume up there. I suspect what you're going to get here is that we're going to get a rest on King Dollar. You know, King Dollar's had a nice run, finished the ABC structure on the way up, did it with juice. King Dollar on the shorter term wants to take a rest. On the longer term, folks, 85.50 is where it looks like King Dollar wants to run to. Let's take a look at some of the high volume stocks in this low volume market out here. You have Apple's the big bird out here. That's down 430. The airlines are getting hit. You get Delta down 201. You have, where's American? Oh, look at that, FireEye. Let's go to FireEye. FireEye gave it right back. FireEye was up yesterday with the Home Depot incursion into the credit cards, and FireEye gives it up ASAP. Pretty amazing. Home Depot. We're going to take a look at Home Depot. Home Depot's getting hit out here again. Home Depot's going after its gap, folks. Home Depot's down $1.67. We had a high of 3 days ago of $93. You're at $89.51. Your gap that's wide open at Home Depot is $84.62. And what that's all about, number one, is selling, of course. But it's about basically nearly all. This is what it says. Nearly all of Home Depot's U.S. stores were hit by apparent credit, debit, card breach. So that's a big number. There's no two ways about that. Some of the Dow stocks out here, we have Big Blue up 44 cents. American Express is up 45. You get Disney up 11. Big Mac is up 30. 3M is down 44 cents. You get Procter & Gamble off 9. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials right now up 6. Nasdaq's off 28. S&Ps are off $1.50. We got gold up 570. Gold got some action underneath it after price disaster yesterday. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow up 9, Nasdaq off 27, S&Ps are off a buck. If we go over to the UK first, we take a look at the FTSE 100. What you're going to see in the FTSE is this. The FTSE, folks, have been trying to get over a high for approximately a year now. Came into it again, and thus far has failed. You know, if you go back, the consolidation has been quite large inside the FTSE. We go back to January 1st, you are at 68.67. The bottom of that consolidation is 64.59. The actual high is 68.94. We got to 68.98 today and basically couldn't handle it. You had the wide price spread. I won't get the volume on this, however, until another couple hours. Yeah. And what the FTSE had done yesterday, it did the same thing as the NASDAQ had done. You had an expansion of volume. Not huge, but you had an expansion of volume. And I suspect when we get this volume today, we'll see whether, it doesn't look to me like it's going to get over the volume of yesterday. But it failed at the 68.94 level. The DAX in Germany, which likes to trade like the NASDAQ, it's still closed up, by the way, okay? DAX in Germany, that does like to trade like with the NASDAQ, that went to 96.84, 96.83 rather. Closed at 96.26. Your swing point on that is two separate swing points. The first one is the 9600, which was established on the 27th of August, and ICE is at the 95.82. So it's come into ICE. I suspect that also, well, this definitely has lighter volume because even with the spike yesterday, you're coming into 131 million. And yesterday they had an expansion. Yeah, well, the DAX didn't have an expansion yesterday, so I expect that's just not going to be able to make it. And what's intriguing about the DAX, of course, is that the DAX is one of the only indices that had turned around, broken the February 5th swing low in March and then again in August. Now, if we go over to Hang Seng, there's something happened in the Hang Seng. So check this out last night. Now, this is intriguing. Hang Seng last night was up 2 3/4%, 568 points, and it had monster volume. So it's an ABC structure on the way up. Let me put this back a bit. So you get an A point at 23,240. It's almost 25,000. Yeah, it's like $2,000. So that's 26,500 level. That's where this thing wants to go to. And if we put this on a longer-term basis, we put it on a 15-year basis, what you're going to see is that, yeah, she wants to go after 20. She's going to go after a swing point from May of 08. Now, what the Hang Seng hasn't done is hasn't got over its 08 level, which is 31,000. But there's something happening in the Hang Seng, and bottom line is that it does want to get up there and get to higher price. It's going to be all about, as we come into this close here today, can Apple basically get out of its funk on the way down? I don't expect you're going to see that. Why? Because what you have is that the fast-priced destruction with the wide price spread just put Apple back. Now, this is how the markets work, folks, okay? We'll have 6.5 hours. Right now, you get basically 6 hours. So 6 hours just took Apple back to July 28th. And you can see how that works, okay? 6 hours takes you back a month. We'll see what type of follow-through we get. What is intriguing is that it looks like Apple's announcement is going to be next week of what they're having, meaning coming out new. But it looks like the Samsung, they had a press conference today out here, and it's like, it's not like they come up with something that was going to change the world. But whatever they said out there, whoever are the larger owners of Apple start moving it out. Let's go take a look at TROV for one of our targets out here. This is a genomics company. The low is 297. The high is 887. And, okay, so, well, this baby went from $3 up to $7. I wouldn't be buying this right now, that's for sure. The question is it a goner? It's not a goner. It's not a goner. But what I do expect you're going to see with something like this is that this can back down right into, well, 487 would be the first space. And if this is something you want to keep in your radar because the way this is set up, so watch this, folks. This is pretty cool. The way this is set up is that you have a high volume swing at $10.20. But you got to remember something, that you have a biotech. And a biotech in general, okay, likes to go to the moon and likes to crash simultaneously. This company here makes all of $45,000 a quarter, okay? And it has a market cap of $103 million. So picture this. This is pretty sick. So someone is paying $103 million for a gross right now of $180,000. Boy, that is insanity, okay? I'm sure they get a great product, but that's insanity. So in that context, I let this thing go all the way back down, because what I suspect you're going to have out here is that as we get into this close, it's very well Apple that basically has basically rang the bell. You know, because the NASDAQ 100 itself, folks, okay, has been going up dramatically. And, you know, we were talking about this yesterday, how every single day from August 8th, you had a very small price spread with the volume dying on the vine. And that, most of the time, is an indication of monster distribution that's happening, because the price can't keep going. The reason the price isn't going so much is that the sellers keep pushing it out. And so you have very small price spreads. Now what you have out here today that's changing, not changing dramatically. You know, it's even with the Apple, which is the largest weighting inside the NDX 100, the NDX itself and the NASDAQ itself is not down dramatically just because of that. You know, you're down 0.6%. The thing that's amazing is that we're down at all. Let's go take a look at CMG Chipotle. The low for the year is 403. The high's 697. And this baby here, yeah, more than likely is going to, you know, fill its gap. You know, that gap is down there at 596, which is $100 down. And this one here is a 4.48 short interest in it. Let me put this on a monthly basis. On a monthly basis, you took out, yeah, see, on a monthly basis, this can go a lot higher. 1 second. So you get $36. Yeah, so it's a 400 A to B. Well, actually, no, it's 633. No, I finished it. It was a monster ABC structure on the way up. That's what it was. And, you know, it basically did what it was supposed to do. That's on a technical basis. A fundamental basis, folks, if you ever go on a Chipotle, they, no doubt, have it down. You know, get a full grill set up in the back. Everyone serves themselves. Throw a bunch of food out there. Big line. Let them go to the cleaners. This is Tom O'Brien. This is TFNN. You stay right there, folks. Don't forget, at TFNN, we do 10 hours of live programming every trading day. Get all that programming right on your cell phone. TFNN.mobi. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 9, Nasdaq's down 26, S&Ps are off a buck. This morning you had Toll Brothers come out with their numbers. Toll Brothers right now are trading, let's see where she is. Okay, so Toll Brothers are trading down $1.55. Huge volume, 5.6 million shares. So let's go take a look at this baby. Well, first off, let's see what they have to say. So, Toll Brothers, largest U.S. luxury home builder, said orders for new homes fell and lowered its forecast for sales this year. The shares dropped the most in a month. For 3 months through July, the company reported net signed contracts for 1,324 homes worth $949 million, a decrease of 6% in units and 4% in dollar terms. Orders don't appear to be tracking, suggesting a lack of buyer urgency. Sales of new homes have been choppy as the economy and housing market struggled to recover from the 2008 financial crisis. Purchases fell 2.4% in July from the previous month to an annual pace of 412,000. Net income for the fiscal quarter rose to $97.7 million, or 53 cents a share. bottom line, let's go back to the chart and we take a look at this. Okay, so this is what you have. You're down with 5.6 million shares. We put this on a 3-year weekly. Now, what you have on a 3-year weekly, folks, is that Toll House has been going sideways since September of 2012 at a high, right? You put this on a monthly, and what you're going to see is that you had the expansion up off the bottom in 2011. Toll House went from $13 up to $35. Okay, so what? That's 200%, right? Last time it had any volume, and this is where this Toll House wants to run to, we're at 34. It's $28. That's where it wants to run to. So when you look at this on a monthly, it doesn't look nothing like it does on a daily or a weekly. So bottom line is that just take your time. Let this basically get into that area, because what I suspect you're going to have is this. Depending on the downdraft in the market itself, you know, it could get to 25. It gets to 25, and you want to be all over it. The reason being is that when you go back, going even into 2008, it's going to be really hard to croak that price point. Why? Because that had been bottoming out since 2007. There's a nice little bottom that's in place there. You have the expansion upside, and bottom line, something that goes up 200% is going to go down. There's no two ways about it. We have, after the, I believe, let's see, Hovania, H-O-V. Hovania is going to be coming out tomorrow. Now, Toll House is the top end of the building. Hovania, let's see, I'm not quite sure where they are in the aspect of meaning middle, top, or lower end. But Hovania right now is only down 10 cents. That low is 375. The high is 680. And we bring this back. We'll put this on a. Oh, so this never got an expansion up. This is interesting. This never got an expansion going topside. Wow. This never got the expansion that, let's see, BZH. Let's see what Beezer did out here. So Beezer's down 52 cents right now, 18.25. And if we look at this and we put this on a weekly, yeah, don't be buying this either. This has a couple high volume lows that are going to get tested. Yeah, we had one 3 weeks ago at 15.27, so that wants to get tested. Put this on a 5-year. This isn't bad. So on a 5-year monthly, the way this is shaken out is that you can get a test of 1740 is the first number. That's the first number on the way down. You break 1740, then you're really going to get some action on the downside. And Beezer, I believe, is the lower end of the market. They decide, first entry level and first time home buyers. Right now, the 10-year is still under 2.5. It's 2.405. That still keeps you at a 4% 30-year mortgage, which is still a dynamite mortgage. And there's no doubt that I suspect, depending, the Fed Beige book come out today, and there's a lot of different parts of the country. Some folks are paying astronomical amounts of money for housing. Other folks are not. There's a couple. That's how housing works. But it is hard to understand sometimes how the price differential after crashes. But this happens every single time in the real estate business. It always happens. That folks say they never can go back up. Guess what? They always go back up. Why? Because there's only so much housing, and the amount of money starts getting pushed into the market once again. I mean, that's what's going on with cars in an incredible way. There's no doubt about that. Tesla, TSLA, let's go over, take a look at Tesla. Now, Tesla's been, no doubt, on a move. Tesla, if you remember, was a large ABC structure on the way up. Took out the B point, took it out with volume, and, this is a large one. A point is $34. Your B is $194. So, what? That's $100. That's $110. Your C was $116, gives you oh my God, that's $226. Blows that away, goes to $265. Now you're at $281. So what would have to happen for Tesla to back down at all, first it has to come back under $265. That's how that's shaken out right now. And with Tesla, you have a 27% short position. That is pretty intense, folks. There's no doubt about that. The XAU and the HUI, when we take a look at the gold market, XAU out here today down 55 cents. Now the swing point in the XAU is 97.05. We haven't hit that yet. It's going to be really impressive if you can get a rejection of the fact that the last swing that we had out there was 97.97. We hit 98.14 thus far. The Gold Bugs Index, same setup in the Gold Bugs Index. The Gold Bugs Index is down 84 cents. You're at 235.86, and your swing point is 231.34. You know, so what has happened inside that metals market is that metal itself yesterday got wide price spread, fast price destruction. The equities themselves, though, did not get to the lower swing point. You know, we'll see if, in fact, the equities want to go down, you know, with the market. As we're coming into the close here, we get to 20 minutes into the close. We'll see. Well, let's go right over to the E-minis first. So if we take a look at the E-minis, we're at 1998.50, and at that price point, we had made it up to the 2011 today. No, she's not going to. This is going to be a battle coming into this close out here, and this is why. At 1500 hours, 3 o'clock, right when I go on Eastern time, you get a small high volume low. That high volume low basically, they're taking out the low at noontime, did it with volume, and that sets up a larger ABC structure on the way down, intraday. Now, you know what's cool about this, folks? This is where, when you're in front of the screens every day, if that's what you do, is that you want to be cognizant of the fact that you already broke the B point. Okay, so watch this. Your B point in the E-minis is 1997.25. On a 10-minute basis, you had 19,000 contracts. Well, we broke that with 29,000 contracts at 1,500 hours. What that sets up is, guess what? Your A point out here is 2009. Your B is, so it's 1997. It's 11 points. Your C is 2002. So that's going to bring you down to the 1992. 1991 price point is A to B equals C to D after you already broke it. This is where knowing these numbers before you're coming in the morning is absolutely dynamite. Why? Because if you're trading the futures, you have a price point. You can put your stop on the other side. You're trading the S&Ps, you know where to do it. You're trading the Nadex product, and forget it. Because what ends up happening, if you haven't test drove that Nadex product yet, folks, come over to our website at TFNN, hit the Nadex banner, bring it up. They'll put $25,000 of funny money into your account. Because what ends up happening is that your trade is your stop, number one, but what you also have there is that they're time trades, okay? You can go, whether it's 8 to 10, you go to the 12, you can go to the 2. Bottom line is that when you have an ABC structure on the way down and on the way up, it's dramatic, particularly when you already broke it with volume. Your probability goes up that you're going to get the initial A to B equals C to D. Oil market. Let's go take the oil market, the CLV4. Why? Because what you had with oil out here, yesterday you go south, and today we go north. We take a look at this contract right here. So yesterday we go downtown with with 320,000 contracts. You're up today with 273. It's going to be interesting. This is a Joe DiNapoli railroad track deal. So the way a railroad track would work is that you back down again and you'd be buying this. I wouldn't be buying it don't buy it, period, right now. I'd wait for the volume to come in and see how the volume comes in on a 0.618 retracement of the move from yesterday to today and back down. We'll be right back, folks.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We get the Dow Industrials right now up 13, Nasdaq's down 26, S&P's a flat, And the beige book came out today, and man, this is always intriguing, folks. For all you folks up in the Boston area, you guys are flying high. There's no doubt about it. So check this out. So this gives the reports from the 12 Federal Reserve districts. Boston area hotels continue to do well. Occupancy rates in July were 92% in Boston. And if you've been to Boston, folks, the hotels in Boston are wicked expensive. Revenues were up 9.5% from July 23rd, mainly because of the average price of a room was up. The outlook in Rhode Island, where the outcome of gubernatorial election, I don't know, it doesn't say much there. New York business at Broadway theaters continue to show strength in July and the first half of August. Both attendance and overall revenues were up 13%. Philadelphia, first-time home buyers are non-existent, according to the South Central Home Builder, reported that August was worse than last year. Cleveland is growing trend for part-time and full-time workers. Richmond, the district ports the district ports were greater than last year, double-digit gains. Atlanta air cargo experienced light increases in tonnage. Chicago, utility usage was up, which is positive for Chicago, evidently. Minnesota, North Dakota are rising, and that has to do with, evidently, the amount of oil that's in North Dakota right now. Dallas, increased work from energy-related projects. San Francisco, higher shipping costs among growers because locomotives were being diverted to the Midwest to haul oil. So bottom line is that when you look at all of that, it looks like to me, when we talk about the amount of cash going into economies, you know, Boston is doing really well. There's no doubt about that. 92% is an amazing rate, folks, to be occupied. You know, because the fact of the matter is that when you take all the hotel rooms in all the nights for a full month, it's just amazing. There's no two ways about that. Coming into the closeout here, we'll see how the NDX can do, because it's all about the NDX today. It's the only indice that basically has come down. Not that it has come down on volume. Okay, it's higher volume than we've had, but it's still not large volume. When the index likes to go south, it likes to go south with 50, 60, 70 million shares. Right now, you're going to end up with about 23 million shares. And out of those shares, the bulk of that will be Apple. You know, Apple could, you know, turn into a real problem for the Index 100. It doesn't take much when you have a weighting structure that's very large. And Apple right now is running to the tune, yeah, she just did 19 million shares in a half hour. She's down 100 million shares per the day. So when you're talking to 19 million shares, so she'll probably come in, she'll do another 10 million shares coming into the close out here. And that's saying that you don't have a couple monster trades that come out once again. Because what we have had in Apple on a continual basis all day is large operators have been throwing some big numbers out there in Apple. So the latest one thus far, there hasn't been any 30 or 40,000 trade out there since, oh no, there it is right now. Actually, 63,000 shares just got sold at 11 minutes past 3. And that got sold at 99.08. So they are basically selling into the close out here. So we'll see how that works. If we take a look at the larger owners of Apple right now, and see, you know, listen, you can't get out of Apple. The amount of shares that are in Apple, large owners can't get out of Apple quickly. What we do, look at this. This is pretty intense. Well, this is really intense. So check this out. This is unusual. Let's see. What day is today? Today's the 3rd. Wow. Check this out. Fidelity must be flipped out right now. Fidelity bought 17 million shares yesterday. 17 million. 17 million. And wow. I'm wondering why they had to basically notify the SEC for that. But anyway, bottom line, 9-2, 17 million shares. BlackRock bought 2 million. But I suspect with BlackRock, what that is, that would be one of their ETFs. Fidelity really doesn't have ETFs, so that's inside one of their funds. So let's see who is selling. Oh, Invesco. They're happy. They sold 8 million shares yesterday. Man, there's a lot of action happening in Apple, folks. Okay, so Invesco owns 1.2% of Apple, 77 million shares. Yesterday they sold 8 million. Now we'll bring this up tomorrow. Because once they start selling, they don't just sell once. But that was the only big seller out here as of yesterday, meaning inside the, well, 2 million shares. Let me see if I got anything else here. Yeah, that was the only one that had to actually claim that they were selling because they owed so much of it. And in the buying aspect of it, we turn around and let's see who else would have been buying. On 9/2, oh, Bank of Montreal also. Bank of Montreal yesterday bought 2.8 million shares. They got to be absolutely elated about that. Let's see. Yeah, that's top line. That's how this is shaking out. So we'll see where this thing goes. What is unusual, I can tell you this, is that with Fidelity buying and the thing still going down, that, folks, is very unusual. You know, most of the time, Fidelity is one of the monsters in the marketplace in a huge way. You know, Fidelity's buying and or selling. Most of the time, it's going in their way, not particularly something that quick. So that's really unusual. But what that also says is that someone else that has a much larger position is selling right into them buying. Okay, so it's all about supply and demand. And today, when Samsung came out, and what Samsung came out with, folks, was a phone. And, you know, our man Dave White, our technology expert at TFNN, we do a program together on Fridays. It's kind of, my understanding is kind of like a phablet, but what it has is that it has a screen that you look at the front of the phone and you're doing it, and then the back of the phone also has some kind of a screen. You know, so I guess it's a little tricky, and folks think it's going to make a difference. This is Tom O'Brien. This is TFNN. You stay right there, folks. You're going to be coming right back. We have the Dow right now down 11. Dow is up 11. Nasdaq's down 26. S&Ps are off half a point. We'll be right back, folks. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone had a great day, safe day. So make it a great night, folks. Let's take a look at, this is by Sarah Van Bonfer. Expect to have hope rekindled. Expect your prayers to be answered in wondrous ways. Expectation is a beautiful thing. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials up 10, Nasdaq down 25, S&P's flat. They were down a half a point. Gold contract up $5.50, traded at $1,270 an ounce. Now, what gold did is this, folks. Got to a lower low, rejected lower price, did it on lighter volume. You're at 1270. You want to see it get back inside 1277. 1277, folks, is the higher range from June 19th. That's where it had its nice day of strength, wide price spread, accelerated volume. Copper, down 2.5 pennies, trading at $3.13 a pound. Light sweet crude, we take a look at light sweet crude. It was down $3 yesterday. It's up $2.42 today. CLV forward. Okay, so check this out. This is going to be interesting to see what happens with crude. This is why. This here is a classic railroad track. If you know Joe DiNapoli, this is one of his railroad tracks. And what it is, it's a flush down, like yesterday. You go back topside, and the way that this gets traded as a railroad track goes like this. I'm not here. I'm going to walk you through this because this is pretty cool. I can't wait to see what happens myself, okay? Because I add volume to everything. So this would be a buy. And what would end up happening is that you'd wait, though, 0.618 retracement from the high of today, which is 95.83, to the low of yesterday, which is the $92. And that would be the buy because he feels that this is a flush out on the downside and you start going up again, okay? So what ends up happening, I would wait till the volume comes in because my take on this is very large ABC structure on the way down. The reason I'm bringing this up, though, is that when these are done and it's a clean event, which this is a clean event out here today, you want to keep your eye on it and see how that does shake out. Our man Mitch in the den is saying, where is Joe these days? Joe and his wife is still in Bangkok. That's where they operate out of. He still has a house in Sarasota, but he is operating out of Bangkok. We take a look at the bonds. What did bonds do? Bonds, bottom line, once again, rejected lower price, did it on lighter volume, and bonds want to go to the moon. It's going to be wild watching this whole thing shake out. The 10-year went to 124.24, 1.2 million contracts, rejected lower price, finished at 125. That's an ABC structure up to the 127 area. 30-year, what the 30-year did, same type of setup, rejected lower price, had lighter volume. 30-year is at 139.03. That wants to go to 142. And what has happened inside that market, just so you know, is that you have multiple ABC structures on the way up, giving you the same price projections. The yield on the 30-year is at 2.398. So that's going to put a 30-year mortgage at approximately 4%. King Dollar, what King Dollar did out here, King Dollar got to a higher high, had lighter volume, basically gave it up. It's about time that King Dollar takes a little rest. She did an ABC structure on the way up, did it with volume, did it with price spread, did it with everything that should have happened. Shorter term, pull back, going sideways. Longer term, that baby wants to go up to that 85.50 mark. Yeah, DGLY. If you want to see something that's absolutely wild, man, John Logan was bringing this up this morning. One of the calls at 8 o'clock. John kicks us off at 8 o'clock in the morning. If you want to see something that's really wild, check it out. Okay, so this was down $10 today, and this is Digital Ally, and these are indications when you come to big market tops, not small ones. Okay, so what does this company do? This company has a security product for law enforcement agencies. The company produces a flashlight that records digital video whenever it's switched on. In-car digital video equipment, digital surveillance equipment that records ultralight and activated by heat and motion sensors. Okay, so check this out. It has a market cap, well, this morning the market cap was $100 million. Now it's $62 million. They have 2.7 million shares outstanding. But this is just amazing, folks, okay? This is like so bizarre, it's unbelievable. They take in, okay, $3.4 million a quarter. So this morning they were paying $100 million for basically $16 million in revenue. Bottom line, gives it up in spades. This is an equity that just gone from $3.20 up to $33. What's that? That's just crazy. Bottom line, you're going to see a little more destruction, a lot more destruction in that equity. We take a look at some of the Apple. Okay, so check it out. Let's go to the NASDAQ first. NASDAQ Composites, what do you have with the composite? Down $25. That's no big deal, 0.6%. Volume-wise out here, we did 1.8 versus 1.8. The NDX 100, the 3Qs, we take a look at these 3Qs. 3Qs came down 59 cents, which is also no big deal. I suspect inside the 3Qs, though, you will get follow-through. Why? Inside the NDX 100 today, the biggest loser pushing that south was Apple. And it was Apple in an extreme way, too, because the NDX 100 really didn't have that much volume in the context of how Apple was getting sold. Apple sold down 124 million shares, down 4.5%, big number. Next stop on Apple, we're at 98.94. It'll be 93.28. We'll see how we come into that level. Last time Apple had any strength, on the way up, is all the way down there at $81. Okay, so that is that's a big number down there at the $81. The gap that's wide open is $74. And if we put this on a weekly basis, what you're going to see is this, is that Once you got back inside 100.72, that was the last high that was established in 2012. Actually, no, I want to go up to the full. Yeah, there's one other high. Here's the high right here. The high was 100.72. Now, we had made it over that high, folks, and that initial high, which is in September of 2012, had volume on a weekly basis of 500 million. Well, we had taken that high out with 247 million the week of the 22nd. We got to a higher high last week with 238 million, and now what you're going to see is a failure. Guess what? Can't bust it up? What's going to happen? You bust it down. Now, the range in this is dramatic. Why? Because the last time Apple went south, we went south from $100 straight down to $55. 45% downdraft. It was actually $700 and went down to $345 or something. So we'll see how that comes into number one and what type of follow-through we have. What's going to get intriguing here is that you do have Apple coming out, I believe, on Tuesday, this coming Tuesday, with their whatever type of new equipment that they're going to have out here. King Dollar. Well, King Dollar, if we put up a continuous contract with King Dollar, what you're going to see in King Dollar is this. Excuse me, folks. King Dollar hit a price point today of 83.07. That had just finished an ABC structure on the way up. I suspect you're going to build some cars for a bit. That cars that's going to get built is going to make a run up to this 85 area, and how we hit that 85 is going to make a huge difference if, in fact, this is an ABC structure on the way up into the 89 area. What you have is that technically it's set up that it wants to go higher. Fundamentally, it's also set up. People are buying dollars in a big way, folks, right across the world. What you have, in Argentina is pretty amazing, okay? Because in Argentina, what has happened is that there's not they're having a tough time, period. But because of the way their peso is going down, they legally can buy. Unfortunately, in the United States, we can legally buy any kind of currency we want. In Argentina, it's not quite the same way, but they are allowed to buy 20% of their pay each week in U.S. dollars. What has happened week after week after week is that the Central Bank of Argentina, if it keeps going like this, will run out of cash. Well, they won't run out, but they're going to run down the cash pretty dramatically in the next 3 months. Yesterday, they bought $42 million of U.S. dollars. It's Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials finished down 10, NASDAQ up 25, S&P's down 1. And as we do each and every Wednesday at 20 past the second hour, we get our man, Mr. John Logan. And don't forget, folks, at TFNN, every trading day, 8 a.m., our man John Logan kicks off the show. Great show, global research every single day. He also takes a video and puts a video on our site. It's on the right-hand side. But you get a lot more than one video, folks, on his show each and every trading day. John Logan, what's going on?
Hey, Tom, good to be with you today. Sorry I'm in transit. Hope there's not a lot of background noise you're hearing right now.
You are awesome, man. You cracked me up. I knew when they said you were on the air, I said to myself, hold it, man. He's on his way to Chicago, man.
Hey, I'm addicted. I can't stop calling Tom O'Brien. So.
You are just too much, man. Well, yeah, you know what's pretty wild is that
today. How about some of those leaders?
There's no doubt. Actually, you know what I was bringing up at the beginning of the show, John, is that you were talking about DGLY at the beginning of the show out here this morning, and it was like, oh, yeah. My God.
Yeah. I actually look at some of the kind of noisy stocks every once in a while, and just try to figure out where to pick the battles on those. If you've got to trade those things, you've got to have a roadmap. That's why we, kind of show that landscape every morning. But I wanted to talk to you about Apple. I mean, we talked last week, in fact, about something is really, super important for guys who are trading indices. 17.5% of the S&P 500 is controlled by 10 stocks.
Yes.
And that's simply amazing in itself. But 15 stocks control almost 23% of the index. And with some of these stocks we talked about last week, catch a cold. Wow. I mean, it seems to move the whole world, and that's the case with Apple today. I was looking at IBM too. I mean, that thing's at a lid at 192 here.
Yeah, and this morning, folks, John was bringing up exactly what he's talking about right now, And it seemed that when the day started, by the way, folks, okay, Europe was up dramatically. And, no big deal. And then, man, someone hit Apple 10 minutes into the trading day, and they hit it hard. It went from 102 to 100 in a heartbeat, and it just didn't stop. So,
I mean, just keeping your eye on that alone almost forces you not to go long the S&Ps because, for today at least, that is just a heavy hammer on the index itself, and, it bored itself out today. I mean, IBM is another, it's 7.5% of the Dow approximately.
Yes.
That thing, to me, looks extremely sick, and that 192 area, I'm gonna be appalled if it passes that Maginot line at 192 ever again. So, so you got to keep your eye on these leaders. I looked at the market breadth today.
Yeah.
The market is still showing kind of upside breadth when it comes to most of the components.
Okay.
But these leaders now may start showing some kind of disconnect, and then that whole market breadth may change. So, we've been looking at an overextended market breadth on the upside, and if that market breadth comes back into balance, based on these leaders, we'll have some decent trading opportunities. And as you know, it's very difficult to trade a market that's just going straight up or straight down. It's we need a little bit of action here.
You do. Yeah, there's no doubt. So you're on your way to Chicago.
Yeah.
And
go ahead.
No, go ahead.
Yeah, I'm on my way to Chicago. I'm gonna stay there for a day or two, cover a couple of bases up there, and then I'm gonna head out to Hong Kong on Friday at lunch and get back on that Asia time zone, and hopefully be a little more awake in your morning. so the show might be a little livelier then.
So here, let's walk through this. Well, hey, you know what? It's going to be interesting when you get in Hong Kong, man. I want to know what's going on in Hong Kong. Last night, man.
Oh my God!
I know that got some real juice. Hong Kong was up 2.75%, folks, and with volume. It did 2.5 million shares, taking out the swing point of 1.3 million.
I tried to call some brokers pre-market today to figure out what was going on. They were all out partying. It was a party.
Yeah. No, you can see this thing wants to go, man. This is an extension of whatever's happening there.
Something else I've been looking at is, this is kind of the boring trade, but it's a cool trade.
Yeah. Sit
on the bid on notes. The market's on all-time highs. The market kind of pulls back a little bit, and then we crossed that board at 125.21 again on the 10-year. And I talked this morning. I said, look, I'm not a big fan of shorting these things. Neither are a lot of people out there.
Yeah.
But, don't look at this as a technical breakdown and, hey, let's jump on the bandwagon, because we did have a little bit of technical damage below 125.21. But let's wait until we cross back above there to get long again, just to confirm that it's okay to step in. I don't know what in the heck would ever turn these things around right now, because, if the market pulls back at all, the stock market that is, these things are going to fly.
Listen, it's amazing you're saying this, because what happened is that you had a rejection of lower price today, on lighter volume, and, of course, they stayed in the top of the range. That's the first part. The second part, folks, listen to this on a fundamental basis. I got to find this. A Morgan Stanley analyst come out today claiming that, here it is right here. Here it is. Okay. Oh, this is
great.
Morgan Stanley Wealth Management, Jonathan McKay, predicts that securities will post here's his grim forecast from now until 2021, that bonds, are going to lose between 1% and 2% for the next 7 years. And my take on this, folks, listen, we know that making, whether you're going up or down is tough. But this one is, to me, is insane because of the fact of the matter, which means that you lose money after inflation. The reason that I'm saying that is that bonds, folks, and he's in wealth management. And wealth management, realistically, wants you to buy equities. Bonds, folks, have been in the biggest bull market ever, 30-year bull market. And even this year, bonds are up more than equities are up. So every time I see that, I say, here we go. You get a wealth management guy saying bonds are going to go down again. I remember, John, whether it's 1997, 1998, they're always saying bonds are going to go down, and they've never gone down.
Yeah. You know what, though? Since we're in kind of bizarro world, so to speak, and all these disconnects are going on, if the market turns down, and starts cracking, the stock market that is,
right,
whenever that day, in the whenever that happens.
Next century.
If those notes don't start ticking up, watch out, because then we might have a situation where market goes up, bonds and notes go up, market goes down, bonds and notes goes down, and then those portfolio managers like you're talking about at Morgan Stanley are going to get creamed, because one of the things that they traditionally do and have done, and they've caught the double-edged sword in a good way this past couple of years, buy stocks, buy bonds as a hedge.
Yeah, no doubt.
Try to play around with the currency hedge. If those things start in that disconnect bizarre world start turning south at the same time, there's going to be some blood.
No, listen, there's no doubt in the volatility. No doubt is picking up. You can see it.
But right now, you got to take it for what it's worth. There's still a bid in the Treasury market, and until we're told differently, do not try to outthink that.
Oh, listen, man, I'm in the camp, man, that these bonds are going a lot higher and yields are going a lot lower. I mean, just, see, when you go across the world, that's the number. It's like, okay, so you're going to go give money to Spain? Well, guess what? Spain is 2.2. We're higher than Spain. It's like, really? Hey, man, you have a great trip, safe trip, and, of course, we look forward to the show.
I'll talk to you up there.
Have a great one, John. Have a safe one. You stay right there, folks. Come right back. The Dow is finished up 10. Nasdaq down 25. S&P's off $1. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had Marvell was up 13 cents. You had Boeing up 46. Disney was up 14. Oxy was up 9. You had Honeywell down 4. Walmart was up 26. If we go over to the oil and gas sector, let's take a look at that, because what you had yesterday is that ExxonMobil was leading the charge down. Flat market out here today in ExxonMobil, up 62 cents actually, 8 million shares. But what you're going to see is that Exxon, first off, had come off its high in July. It had a high price out there, 104, goes south to 98, monster volume on the way down, 98 million shares. 18 million shares, sorry, 18 million. We've been going sideways since that point with each and every lower price point with more volume. This looks as building an ABC structure on the way down. Your B point, which it hasn't touched yet, is 97.63. Yesterday we got down to 97.81. You did that on 8.9 million versus the 10 million. Yeah, 10 million. Today, try to get the higher price, 8.4 million, couldn't handle it. CVX, okay, we take a look at Chevron. These two right here, folks, are the largest weightings inside the XLE. That's why I want to keep your eye on them. And, you know, as John Logan was talking, he was talking about the weighting structures inside the S&P, the weighting structures inside the NDX 100. What's so cool about the oil and gas sector is that these two equities comprise a huge amount of that whole sector. So what do we have there? Same type of setup. You get a B point out here that's laying out here at 124 in Chevron. They come off the high of 135. And we'll see how that baby shakes out, because when we pull this up and we take a look at the actual weighting structure, what you're going to see is this. You get Exxon is 14.8%, Chevron is 12.8%. You know, so you're talking about 27.5%, just both of those. Schlumberger is next with 7.6, and then ConocoPhillips is 3.7. So if we go to SLB, we take a look at Schlumberger. Oh, this is sweet. Check this out. This is intense. So Schlumberger, another ABC structure on the way down. That couldn't hold price out here today. The A point on this is $1.18. Your B's at 106. So you get $12. Your C's at 111 gives you a $100 A to B equals C to D. We put this on a little longer-term basis, and these ones, put this on a monthly. Oh, wow. This is interesting. So on a monthly basis, what you had up here, how does this work? You know, when you get double and triple tops, it's like amazing. So the high in Schlumberger in 2007, folks, was 114.84. You did that high with 250 million shares. You tested that high 8 months later with 270, never made it to the high, and then that was the beginning of the financial crisis. Schlumberger crashes like the rest of the market. It went from 111 down to 35. Well, we just came up and tested that high with 131 million shares versus 251. And you had a failure. Now, a failure on a monthly is a huge heads up. You know, so bottom line is it did the work that it was supposed to do, made it to its high, failed at its high. Now the question is going to be, how much juice does it have coming downtown? Let's go over and take a look at Amazon, because our man John Logan was looking at Amazon this morning, too. Amazon right now is one of the equities that is set up for quite a fall. Amazon only down $3 today, $3.38. But what you have with Amazon is this. Amazon has been off its highs since January. High in Amazon's 408. You're 339. You have a high volume low that's out there at 288. So it's like, okay, are you going to do that ABC structure on the way down? We know how fast and furious Amazon can get when it goes. In July, you're talking about a wide price spread. They had a price spread of $50, 15%. The high was $364. The low was $311. It closed at its lows. Last month, made it back up. This month, you got over that high just today, which is the 346. I guess no, we didn't make it. So we get 343. Try to test the 343. This is very large ABC structure on the way down. We go to Google. We take a look at Google. Oh, we have a Google. She is out there at 589. And we take a look at this, how this is set up. She's in a consolidation, but yeah, the low of April, it's 511. It's still a high volume low. There's many equities out here that continue to have those high volume lows. Apple's going to be one you want to keep your eyes around in a huge way. The reason being is that just about out of nowhere today, this came. The thing that's amazing about the Apple deal is that most of the time you can wait to the announcement and then you're going to get the volatility in it. In this particular case, we got the volatility in it before the fact because of a Samsung announcement. And I do expect, though, what you are going to see, you know, Apple's not going to basically sit there and, you know, not fire back on a public relations deal. That's for sure. So what happened today is Samsung unveiled a pair of Galaxy Note smartphones, including one with the display extending down the side as the #1 seller tries to fend off Apple's push into large screen devices. The screen of the 5.6 Note Edge extends beyond the front of the phone, allowing users to read messages, news, and stock tickers, I love it, from an angle. The Note 4, the largest version of Samsung's marquee 5.7-inch device, features an upgraded display and improved camera, Samsung said in Berlin today. The company also showed off a virtual reality headset developed with Facebook and a new smartwatch. The smartwatches, I can tell you, folks, I actually just got a Galaxy 6. And the smartwatches, no doubt, when you're buying these, they're always trying to say a smartwatch. Now, the smartwatches are pretty cool. What I do expect you're going to see that's going to happen with these smartwatches is that if you think that phones take a lot of video right now and folks don't understand that, you know, 'cause you find out whether it's people doing crazy things and everyone has a phone and everyone's getting caught doing crazy things. When these smartwatches get pushed out, it's going to be amazing how much video that we actually see, whether it's of officials doing things they're not supposed to be doing, people doing things they shouldn't be doing. All of that's going to be in play because they gave me they showed me how this thing works, and it's absolutely wild. There's just, you know, you have a regular watch on, you can be putting your hand up in the air, you can be doing anything, and it is videoing the whole time. So this is going to be a whole different brave new world, privacy-wise, as to how many folks are going to have these watches and exactly what type of videos are going to be out there on a continual basis. We go over to the financial markets, meaning the financial sector, the XLF. The XLF got to another high out here today. We went to 23.56. Stayed up at these highs, hasn't backed off whatsoever. We go take a look at J.P. Morgan Chase. J.P. Morgan did get right into ICE, which is the 59.39 area. We went to 60, but she stayed over the 59.39. She'd have to come back underneath the 59.39. Now, J.P. Morgan did on 11 million shares versus a downdraft of 29 million. BRK, we go to Berkshire Hathaway. Berkshire Hathaway right now is the largest weighting structure inside the XLF. That's still at highs. That's 137.73. Bank of America, BAC, we take a look at Bank of America. Bank of America is basically still in a consolidation. She's at 16.10, and that looks like it's going to run down to the 14.86 mark. What did happen after the close out here today is that the inside the Justice Department, the number 3 person inside, his name's West, he's going to be retiring, and that's the guy, I suspect that means that most of the fines that are going to be put on the banks for the mortgage deal is over, because the guy that had been basically in charge of that for the last 5 years, he's going back to the private sector. That came across the tape, and so I'm sure those banks are absolutely relieved. The guy that's really going to be relieved, I suspect, is the guy from Countrywide. Yeah, and you know what's amazing? It's amazing the gall in some of these CEOs, especially him. He was out there on Bloomberg 2 days ago screaming that, Countrywide did nothing wrong. He did nothing wrong. The bottom line, folks, is that there were so many fraudulent loans. There was, it was just like insanity. And I guess he has to stick up for himself, but bottom line is that I'm sure he's elated right now, because the guy that retired out of the Justice Department was the guy that basically was putting a hammer on all the banks. So I do expect that the SEC wants to go after him civilly, but big deal. He's got billions. So you pay a few billion here, a few billion there. What's the big deal? This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll keep coming right back. Don't forget, at TFNN, we broadcast live content every trading day. 8 o'clock in the morning to 6 o'clock in the evening. Get it all right on your website, right on your phone at tfnn.mobi. We'll come right back, folks.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow finished up 10, NASDAQ down 25, S&P's off $1. And don't forget, folks, right after me, 5 to 6 tonight, we got Allie Ford, Mindful Living. You want to stay healthy? You stay tuned right here, right at TFNN. Let's go to John in Boston. Hey, John, what's going on?
Hey, Tom.
How you doing?
Way too good, buddy. How about you?
I'm doing good, man.
I have a general question about the gold market. You know, most of the equities, you know, in June 4th or something like that, and then up to June the 24th or something like that, they moved up, you know, fairly decent.
Yep.
And on fairly decent volume. But since then, you know, they can't get back up to where they were there. And what I was wondering is, in your experience, is there a precedent here when this market lags like it's doing and just can't get its footing, that you just bail out and it's over? Have you seen that in the past, or when have you seen that in the past?
Okay, so let's walk through this. I've seen it in the past, and, you know, a good 2 or 3 different times. And what this has to do with is gold making a bottom, and the bottom that we've been making, okay, this thing has been going on. So picture this. This is the much longer term deal here goes like this. Gold was down for 3 years, okay, and the equities themselves got killed, right? You know, no doubt. They've been building a base now since June of 2013. When you build a base, this is how it works. And, you know, this is what gold has done before. You go up, and you go up further than folks think, meaning most of the time you go up 30 or 40%. People get excited again, and then they get in at that 30, 40% instead of selling out. And then what ends up happening, you get a pullback all the way to the breakout area again. Get some strength again, gets moving again, does the exact same type of situation, goes up another 30%, gives it up again on price, pulls back again, bases out again, then you do the same deal once again. That's where we're at with this right now, John. And, you know, if we look at even the few, let's say you can pull up almost any of them, they're all about the same. Some are in better shape than others. But what I expect you're going to see is that what has happened thus far is this. You're pulling back on lighter volume. You keep getting to higher highs, and the volume comes in, but what you have to keep attuned to is what is the percentage move that every time that we've done this, you know what I'm saying, that we're going up? Because once you go up this 20, 25, 30%, you got to start taking some money off the table. And right now, where we stand in gold, and this is where, you know, so I understand your question really well. Because of the fact that where we are, it's like, okay, are we going to break down?
Exactly.
You know? No,
Right.
Listen, I know because, you know, I've seen it before, and I always get worried, you know, when we own 6 or 7 stocks, and the gold report is always like, oh, man, okay, hold it, you know, they're in good shape. But the fact of the matter is we know the metal market in general is highly volatile, and that's why stops are important. But the way that we're trading right now, saying that this bottom really is in place, and when I say bottom, folks, this has been going on for a year and a half, okay? But that's normal after how much we basically got smoked on the way down. You know, where the wild card is here in this whole deal, you know, so technically we're set up. Fundamentally, I'm trying to figure out, like, okay, man, you know, what's going to make it go? Is it right. Is it Argentina that is just buying dollars and they're buying gold on the side? Is it inflation that's going to come in? You know, we have no inflation right now. Bonds seem to want to go higher. The dollar wants to go higher. It's like, okay, what's going to make this happen? But right now, the gold equities are still stronger than the physical gold, and what we needed inside of the gold market today we got. And what that was is a lower low, lighter volume, and a rejection of price. What I'd want to see now is that the quicker we get back inside 1277, the better off we are. We get back inside that 1277, that's the June 19th day of strength. You get back inside that, that says that you get game on again for 1347. So
yes, sir. What would have to happen to the gold market for you to get completely out and not even wait for the stops?
If I saw one of the, let's say that if you saw one of the gold stocks that you like breaking swing points with volume. Right now, here, let me give you an idea. Right now, see, Gold Corp yesterday had big volume, but not like the swing point. We had 6.6 million, but you were coming into 11.6. You know, if you get an expansion of volume and you're breaking your swing point with volume, then you get a problem. You know,
okay.
That's how that would shake out, because it wouldn't just be one. That's right. You know, like Royal Gold yesterday and Franco Nevada, they came down. So that Royal Gold come down to 1 million shares. It was going into 1.1 million. That's dicey, okay? But today what it did, it went to a lower low of 580,000, rejected the low, and that's what I like to see. So that's half the amount of volume, rejected a low. You're at 74.22, which is over the 73.81, which you need. So.
Okay. You saw, excuse me, you saw 2 or 3 of those bail like that. You would just bail out.
Yeah, it's a close call, man. Keep your finger right on it. No, I know, man. I know.
I know, because just like you always say, you know, it's fast and furious, you know, man. They move, and they move in a hurry. Then you get out, and then you wait for the pullback, but it's just laggard this time, man. Thank you so much.
Okay, have a great one. Have a safe one. So it is important, folks, okay? Don't let these things, you know, keep stops in. Don't let them get away from you. I don't expect a problem in these equities, but the fact of the matter is that they're at the June 19th day of strength. That's where they are right now. And the real key is going to be if, in fact, the market wants to pull back, do the equities pull back with the market? Because something that you always want to remember, if you went around in 2006 and 2007, you know, when these markets did go south, guess what? They all went south. A little bit different deal this time, meaning they're acting differently also. When we had the metals market, the actual physical metals market pull back, the gold and silver equities themselves haven't even got to the swing point. That's you know, that's impressive. You know, now we're right at it right now. The XAU, we're at 98.20. That swing point is 97.05. And the gold bugs index, you're dealing with we're 235. That swing point is at 231. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. You stay right there, folks. Allie Ford's coming right up with you. When mindful living. Go get them, folks.